Welcome to Policy in Wonderland. I'm your host, Evitar Mira, and as you already know, you can call me Evi. In Policy in Wonderland, just like Alice, we are going to explore and see the wonderful world of insurance, Insurtech, and everything that's connected to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, brokers, and more. So without further ado, we travel today to the UK, and I want to invite my guests to join me as we go down the rabbit hole. Please welcome Tim Quayle from OneAdvent. Hello, Tim.
Hi, Abby. Thanks for having me on the podcast.
Great to have you here, and thank you for joining. I love what you are doing and the hub that you created. But I don't want to jump in, and before we start to talk about OneAdvent, I want to get to know you much better. So can you provide us some insight about you, your background, your personal journey, how you end up with OneAdvent?
Yeah, of course. So I guess like a lot of people in our industry, I didn't set out with a dream of becoming an insurance professional. I think I've still yet to meet someone who set out and intended to work in insurance. Oh, okay.
Yeah.
I now met someone. All right. Number one. There you go. Yeah, I guess. So I did a computer science and maths degree at university, and I then joined an IT services business straight out of university, and we did sort of traditional IT services, bit of software development, and I took that business up to London and started building a client base in the insurance industry, not through any real strategic focus, but we like a lot of these things happen. We came across a software vendor that we liked, and we got on well. There was mutual value in us sort of working together and targeting clients together. They built some software for the insurance industry, and so everywhere they went, they dragged us in behind them. And so we started building a client base in the insurance intermediary space, and that client base grew, and we started actually building software systems for intermediaries, and that started with a big claims platform, and then probably towards the end was very much focused on building a kind of MGA underwriting platform, and we were tasked with what I now know to be the impossible goal of building a platform that could onboard any kind of MGA and support any type of business line. And so I guess, not being from the insurance industry, we probably naively took on that remit, and spent a good 2 or 3 years bashing our heads against the wall and building something that was never quite fit for purpose for anything. And so that was sort of yeah, I guess my career was very much IT, but I was never really on the technical side. I guess where I always focused was on, or my role was sort of understanding our clients' businesses, understanding how their businesses work, and understanding how technology could support that. And so it was always really with a focus on business, and at that point it was business and how can technology enable businesses to grow and succeed and manage risk and all that kind of good stuff. The business that we were building this software for was acquired by an Irish asset management business that were looking to diversify their portfolio, and they wanted to go on a kind of roll-up journey, and they were looking to put a kind of senior team together to make that happen. And so yeah, they approached. I'd worked with them on a number of projects for kind of 5 or 6 years, and so we had a really good working relationship. And they approached me and said, "Well, do you want to come and join?" At the time, I didn't know it was called OneAdvent. I don't think anyone had come up with that name yet, but this sort of concept of ultimately buying a number of businesses and bolting them together and building this kind of distribution arm in London.
And so it was 5 or 6 years ago?
Yeah, this is probably, it's either 6 or 7 years ago now. Okay. April the 1st, I joined them, which read into that what you will. But yeah, so it and I think at the time I think I'd spent a lot of time working with other people's businesses and looking at how technology could support and enable their businesses. And so I think it was sort of an interesting challenge for me to jump onto the other side of the fence and actually go and build something as more of an operator than a sort of tech service provider. And so and I'd worked with these guys well. I liked them. I knew we could work together. And so I joined what became OneAdvent. And so what we tried to do then is work out, okay, of everything we've learned on this journey, and we tried and failed at lots of different things. So we learned quite a lot along the way. Where do we want to position ourselves, and where do we think we can add value to the intermediary space? And so we really focused in on this sort of MGA platform concept, and could we provide this kind of full stack services platform? And so
this is the specific issue that OneAdvent currently addressing within the insurance industry?
Exactly that. So probably about 2 years ago, we really focused the London operation on, can we provide a business that is focused on supporting specialty MGAs, and can we build out our capabilities so that we can support them across the whole of that life cycle? And so that became our focus. And then we did a management buyout last year. And so we took the business independent of our previous shareholders. We've got some new investors on board, and really for us now, it's about taking the building blocks that we've put in place and really accelerating that. So
you know what? Before we dig in, could you elaborate?
Sorry, I didn't give you much background, did I? I sort of went straight into OneAdvent.
Could you elaborate more about the concept of MGA? I know my audience already know what is MGA, but to be more clarified about what is actually MGA and its role within the insurance industry, and especially from the UK point of view.
Yeah, of course. And I guess there are a number of different ways to look at this, right? From a regulatory standpoint, an MGA is exactly the same as a broker. We're a licensed intermediary business. The fundamental difference, and this isn't reflected in the regulation in terms of having to categorize yourself differently in the UK, but the fundamental difference is a broker acts for a client and an MGA acts for a balance sheet business. And so I quite like to think of MGAs as almost sort of virtual insurance companies. Ultimately, you are developing products, you are underwriting, you are pricing. You're doing that on behalf of a balance sheet business, so you're not carrying any risk yourself, but you are essentially protecting and controlling that third-party balance sheet. And so, yeah, it's almost you're an insurance company in everything other than carrying risk on your balance sheet. And having the ability to pay claims. And so, yeah, I think sort of where, with all the pressure that you have in insurance on especially at the moment with kind of distribution commissions, lots of mouths to feed in the chain, the obvious question is, well, why put an MGA in there? There are lots of insurers that are perfectly capable of developing products, pricing products, underwriting products, and then there are lots of good brokers and distribution companies that can actually engage with customers. Where does an MGA sit? Is that just another mouth to feed? And I think that probably there are, or well, certainly there are MGAs that you could very much point that finger at them. Historically, there have been MGAs that are just sort of Me Too businesses, which aren't really justifying their existence in that distribution chain. But where the MGA structure works really well is where you have really specialist teams who understand a particular segment of the industry really well, and they can bring all that knowledge together and capture that in a vehicle and give access to that business to a balance sheet that doesn't have that expertise and doesn't have that in-house experience. So therefore they're immediately adding that value to that distribution chain. Or where you've got people who are innovating, who are looking to try and do stuff a little bit differently, try different concepts. And it's much easier doing that within an MGA constraint because you're smaller, you're more nimble, you're there are less hurdles to jump through. So you can be a bit more innovative, and you can try different stuff, and you can operate and evolve a little bit quicker than a traditional balance sheet business. So there are some really good use cases for MGAs. There are also some examples of MGAs that probably aren't delivering a lot to the insurance distribution chain, and are just adding 10 points to your insurance. And so I think, but what I would say is, and we've seen this in London over the last couple of years, I think the bar is being raised for MGAs. We're seeing less and less of the sort of Me Too plans of kind of, well, I've done this all my life in a big carrier, I just want to go and do it in an MGA. We're seeing people having to come with slightly different plans. Maybe it's got a little bit of a technology edge, or maybe they're real specialists in a certain area. And so I think we are seeing less sort of Me Too businesses and more MGAs who understand that you've got to justify that value that you're taking out of the distribution chain.
So it's like the MGAs that you're talking right now is like going to the basics, like you're focusing more of the professional side to give you the edge, the value, like the unique underwriting for the property that you underwrite, and not just I will give you an amazing tech with AI, with all buzzwords that we know, and now we will give you a real value, a real insurance value.
Yeah, I think that's right. And one thing we've observed over the last sort of 3 or 4 years is, I think 3 or 4 years ago we were seeing lots of plans with buzzwords throughout them. And it was, we're going to change everything. We're going to revolutionize the industry. And the reality is that very few of those have gone on to do anything meaningful. And where we've seen the successful businesses are those who understand and respect the insurance industry and understand the importance of it and why it's been successful. And they say, okay, this bit over here, we're going to do that bit better than everyone else, and that's going to be our edge. So we're not talking about changing we're not talking about let's get rid of brokers, let's automate, let's take that bit and let's do that bit really well. And actually, if we do that bit really well, we can justify our value and we can build a really nice business around that. So those are the ones that we think have shown traction. And
you said a sentence that it's very touch respect the insurance sector. It's very unique point of view, because you don't just want to make or to create the better tech, and we will give you, as you mentioned right now, but to respect, not just to understand the insurance sector, to respect the insurance sector. You can delete all the brokers, you can delete all the insurance agents or even carriers. No, you need to respect them.
I fundamentally believe that. I'm still really an outsider to the insurance industry, right? In insurance terms, I'm a newbie still. I'm a 7 years newbie, but and I think it's very easy if you come in from another industry to look at some of the practices for the insurance industry and just say it's terrible, it's all broken, it could all be done better. It's very easy to do that, and I think until you spend a bit of time in it, until you understand why it works the way it does, and don't get me wrong, I'm not saying that. I mean, there are vast swathes of the industry that could all be improved, but I think until you understand and understand it and understand how it works and why it works that way and how it's developed over time, I think until you've got that, I think it's very difficult to then go and innovate. And where I guess over the years we've supported a number of businesses where no one in the business has come out of the insurance industry, and I think we haven't seen a lot of success in those businesses. They've found it hugely frustrating. They butt up against the regulation. Everything moves slower than they'd like to, and I think that, yes, some of those things are frustrations, and there are some barriers to getting stuff done. Some of those are barriers that have been put there for really good reasons, to protect customers and all that kind of good stuff. And some of it is because we're dealing with very big businesses who are protecting very large balance sheets and year on year deliver fantastic returns for their shareholders. So but I think until you're much more likely to be able to innovate and iterate a little bit and build a successful business if you understand and respect kind of where the industry is today.
Let me be the advocate here. And why does MGA need OneAdvent help? Why do I need you as an MGA?
So I guess our
what kind of offers did you have to the MGA that operate in the UK?
So I probably summarize it in 2 points, which is speed to market and managing execution risk. And what that really means is there are barriers to entry in the regulated world, and what where we come in is we can help businesses to operate under our umbrella. So we can essentially act as a regulatory principal for those businesses, and we're directly authorized. We have a direct relationship with the regulator. We can say to a business, well, look, we will take you under our regulatory umbrella. And so we will essentially vouch for you as a business. We will understand what you're trying to do. We will put a framework around that, which means you don't have to go through a process with the regulator at this point. We will go through that process on your behalf, and we will vouch to the regulator and take responsibility for what you're doing, which allows you then to focus on getting to market faster. And so we can hugely shortcut that process of getting products launched in the UK by saying, and don't get me wrong, like we have to be very careful, because everyone we take on under our regulatory umbrella is essentially operating as us from a regulatory perspective. And so there's a lot of getting to know people. There's a lot of trust. There's a lot of understanding business plans, making sure we have the necessary expertise internally to support that business. But if we can get on board on all of that, what we can do is provide people with a much faster route to market. And we all know that if you've got investment behind you, if you're trying to try new ideas, getting to market quickly is so important. You need to reassure people that you're onto something. You need to kind of get your investors on board. You need to prove concepts, all this kind of good stuff. And so that's one part of it. And I guess the second part is execution risk. So we have a team of
before the execution risk. So right now, for example, I'm Insurtech. I'm a new Insurtech. Day one, I have a great product that I want to deliver to the market, and I understand that the best go-to is model business of my own Insurtech will be to be an MGA, for example. Okay, so before I will go get licensed to be an MGA, etc., instead of that, I will go to OneAdvent, and you will do all the process with me, and to eventually until the execution part, or with me also with the execution part, right?
Yeah, absolutely. So wow. So generally speaking, we so people come to us with business plans, or sometimes just ideas that have still need to, and we can get as involved in that those early stages as we need to. So if it's an idea, we can help someone build out that idea, test it, validate it. If someone's already been through that process and they've got a well-formed business plan, then yes, we need to get on board with that. We need to understand it and understand the assumptions and all that kind of stuff. But we can then take that business through what's called the appointed representative process, right the way through to them being acknowledged by the regulator as an appointed representative of our business. We then provide them with a framework of how they can operate in a compliant way. So we essentially work with their teams and their products and their operating model, and we wrap a framework around that so that they operate in a compliant way. We then have an ongoing role to work with them, to have oversight of what they're doing, to understand, to support them under key functions. So looking after customers, consumers, all that kind of. And so we're then heavily involved in the development of that business. Now, what tends to happen over time is that business will, assuming it's successful, will grow. It will build out its capabilities, build out its experience, and so our support will become less over time. And ultimately, at some point, that business may pop out the other side of our platform and become directly authorized in their own right. And so that sort of, and I guess we try and position ourselves as that flexible partner who on day one understands what you need, but also understands that on day 60 that's probably looks a little bit different, and in 2 years time that probably looks completely different, and ultimately we can be there on that journey with these businesses.
Okay, so let's talk about section 2, about the execution risk.
Yeah, so I guess this is about providing a robust structure around. So a lot of the businesses that come to us are 2 or 3 individuals who have a good idea or are experts in their field, or and what they want to do is they want to get that product to market quickly, and they then want to scale it, and they want to bring the right partners on board. They want to have the right operational processes, the right advice and support. And so what we're able to do is put a team around them. So no longer is it 2 or 3 individuals. It's a big team of experts who can help support them on that journey. And where that becomes really important is a lot of these businesses will be underwriting on behalf of big insurance carriers who have very high bars for I guess the entities that they're going to support and ultimately provide a binding authority or delegated authority agreement to. And so what they're looking for is has this business got the support structures in place that we can work with them as a counterparty, and we can hand over a level of trust to them. And so that execution risk becomes really important, because and whether you're an investor putting cash behind it, whether you're a balance sheet business handing over the pen to an underwriting team, what you want to understand is, has this business got the right team, the right structure, the right governance framework to succeed, and is that, have we got an experienced partner who is in there helping that business to evolve and grow?
So you're like a modern incubator for MGAs.
Yeah, so I think a lot of people describe our business model as an incubation model. I think it's there are elements of that model that are absolutely right. I think we're probably the incubation and launch part is part of it. I think a big part of what we do is then help those businesses to scale and ultimately achieve their goals, be that an exit in 5 years' time or
This is the important stage. Not only the beginning, that is of course very important. You need to begin from somewhere, but the growth part is very important, especially when we talk about insurance.
Yeah, absolutely. And I think and I wouldn't say we don't have all the building blocks in place yet, but our sort of vision is, can we support an MGA through every stage of their life cycle? And that for me is about growing into different territories. That for me is about moving from being a pure MGA to being able to participate in some of that risk. So potentially bringing a balance sheet into play, be that a captive vehicle, syndicate in a box, any of these kind of balance sheet structures that are natural evolution for MGAs. And so ultimately we'd like to be able to say to teams, look, if the MGA route is the right route for you, we can support you at every stage of that journey. And that's what we're trying to achieve in terms of our capabilities.
Just to clarify, you only operate in the UK, right?
No, so we have 2 businesses set up in Germany that enable us to support European MGAs.
Nice. So the EU and the UK.
Yeah, and I guess so. Lloyd's makes up probably half half of everything we do. We're a Lloyd's cover holder, and so yeah, we operate Lloyd's and company market, UK and Europe.
And you don't only serve MGAs, right? You also serve investors and different entrepreneurs, right? What I saw on the website.
Yeah, that's right. And I think what we're trying to do is, I guess all of it comes around
capacity providers also. It's very important to know that.
Yeah, exactly. And I think it all comes down to this sort of execution risk piece. And I think it's understanding who the various stakeholders are in the MGA market. And so it's investors, it's capacity providers, it's brokers, and understanding what all of those are looking for in terms of a service partner to help them bring these deals together. So investors, speed to market is huge, right? I mean, they want validation on what they've written a check and they've been convinced that they've written a check for a brilliant idea, and they want to see some validation on that, and they want to see that quickly. And so yeah, it's about understanding what role we play for each of these different stakeholders, and actually being able to communicate that. So capacity is probably probably most of the kind of new MGA leads we've had recently or in the last month or so have actually come from capacity providers who they want to, so they might have been introduced to an underwriting team or an idea. They want to provide capacity for that idea, but there's no way that they can provide it to two guys who are setting up a new startup business. And so what they're very keen to do is find somewhere that they can put these guys or girls, this team, and put it into a structure where they can get comfortable that all of the support is going to be provided to manage their risk.
Okay, nice. Could you elaborate about, give an overview about the Insurtech market in UK?
Yeah, of course. I'd say, yeah, it's in honest truth, it's probably tough at the moment.
Why smile?
It's tough at the moment. I think it's I think so. I probably joined the insurance world at a nice time for Insurtech, where you had a flashy business plan and a couple of reasonable names on your team sheet, and you could probably take it around the market, have working capital and capacity support within a week. It was that kind of everyone was worried on missing out on it, and so even your most traditional London market carriers who weren't in any way set up to support innovative Insurtech businesses, they still wanted to be part of it. And so it really was, you didn't have to put too much effort into an idea to get some backing to have a go at getting something off the ground. And so there were loads of this stuff going on. And I guess what we've now seen is most of those businesses are burnt out. And I wouldn't say that the industry has been impacted by huge kind of claims losses but what I think what has happened is those capacity providers who perhaps supported these businesses, yes, they haven't seen terrible underwriting results. It's not a kind of, we've got huge losses, we're not doing this again, but they put a huge amount of internal effort into supporting these businesses, and they've never gone on to deliver meaningful premium volumes. And so I think it's more that sort of internal cost of supporting this type of business. And so what we see now is that there's a lot more cynicism. There is a lot more is expected of business plans. You have to show a credible team that has either done this before, or there is some confidence that team can execute on it. The plan has to have something different about it. It can't just be sprayed full of buzzwords. I'd say there's a lot more scrutiny now, which is which inevitably means that there are a lot less plans getting backed and launching in the market.
Let's talk a bit about tech. Okay. As a tech, this is your background. In your experience, what are some of the emerging technologies or innovation you we will see in the future of the Insurtech. Not to be like 10 years from now, next year.
Yeah.
And don't say generative AI, at least not in the first sentence or something.
I thought that was all I could talk about in this section. What are we going to see? I mean, jokes apart, I now have seen the first. I'm not going to call them an Insurtech. They are a startup MGA that has developed and built a platform that utilizes AI that will streamline their underwriting process, and I've seen it live and working. So, all jokes aside, and I know that every business plan for the last 2 years has had AI in it somewhere, but I genuinely have now seen a technology stack that I believe will streamline and automate elements of the underwriting process. And they very much focus on taking
it's working.
It's working. I've seen it working.
Wow.
I've seen it working. And it's about taking large amounts of data and processing that data and putting key bits of information in front of the underwriter at the right point in that underwriting process. And they started small, as in they're not trying to change everything. They've just focused on a few bits, and over time we'll build that out. And so I have, despite I have now seen something that genuinely is utilizing AI, and that I expect to go live this year. So we're helping that business go live at the moment, and so yeah, I think that will genuinely have an impact on areas within the industry. Yeah, in terms of other innovation, I think there are a lot of guys that are doing good stuff in the data space and bringing data sets together that can support better underwriting and better analysis, and so I think that's probably, as a platform, that's data is probably the bit that interests us the most. We support a whole range of different businesses, and between them they have quite different technology requirements, and some have built their own platforms, some have bought platforms. The one thing they all have in common is they have this data set that they collect as part of the underwriting process, and actually the more insights we're able to deliver back to them by using that data, the better decisions they can make, and the better partner they can be to their capacity providers.
Okay, as we near to the end, are there any final thoughts that you would like to share with us?
I don't think so particularly. I think we covered a lot of ground. I think the one thing I would say, so a lot of what we do as a platform is we support businesses that are based outside of the UK and Europe, who have developed a concept, developed an idea, and they may have launched in their territory, begun to get some traction, and see that the UK and Europe could be a natural follow-on market or a natural expansion market. And so a lot of what we do is we help those businesses to essentially work out what they need to go after that opportunity, and help them put those building blocks in place. And so, yeah, that's probably the kind of parting comment from me is if the UK and Europe are interesting markets, we're a great partner to help tackle them.
Awesome. I will post the links to OneAdvent and your LinkedIn in the notes of the episode, and we will do a follow-up with the MGA startup that you mentioned about the streamlined underwriting. It's this thing that I want to see.
Yeah, 100%. Wow. We're targeting launching in the next couple of months, but absolutely, we will.
We'll stay in touch. Yeah. Nice. So, Tim, thank you very much. I really enjoyed and learned a lot from this conversation. Thank you.
No, thanks, Evie.
Have a good one. Bye-bye.